Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, June 24th, 2020. Although the market's still open, we only have about 6 minutes to go, and I don't expect any fireworks before the close, and really not a whole lot could happen that would change anything. So let me just start here. We'll run this video. It won't be very long, but it will go into and then shortly after the close. All right, so what happened today and what didn't happen? Let's just talk about that primarily on the indexes. We had on SPY, remember, we had these sell signals recently, breakdown, pretty powerful gap down, island cluster top put in there. We remain below the island. It keeps that sell signal intact. Markets followed through on the downside and then had a reversal. And so really what I've been watching is this recent trading range right here. Since we snapped back, we kind of locked into a very tight trading range, and we broke down below there today. And as you can see right now, we're trading at 304.05, so we're below that. That's where we're poised to close today, and that gives us somewhat of a sell signal. It's a breakdown. It's a break below recent support range. Not much, not nearly as significant as this was, but it's a start. And remember, we still have a confluence of support just below. Don't know if you can make them out here because I have the levels turned down, but right where I'm going to circle is the 200-day exponential moving average, 200-day simple just below today's lows, or just below today's lows, 50-day exponential moving average. So those are key moving averages right there. And we still have this big trading range that went on for a while back here. The top of that trading range really is support, and that's about 294.85. So on the bigger picture, there's plenty of work to be done on the downside, plenty of support for the market to have to get through, or maybe find that support and turn around and rally up, or if it breaks down, again, bearish. So to put it easily, all the MAs are right there, the moving averages, the key ones I just mentioned at least, and then just below that, we'll call it around 295, pretty big support on SPY. We start going down through there, it will increase the odds that we're going to continue down, and increase the odds of what I still maintain. I think this is a bear market rally. I think it's pushed the upper limits of one, but we're still off the all-time highs in the S&P from back in February, and this is the stock market. Remember, QQQ or the NASDAQ 100, it's not the stock market. 5 stocks, Apple, Amazon, Microsoft, Facebook, Amazon, those are not the market. They're big stocks. They're certainly top components of the market. So we need those guys to break to get any more significant downside. And why am I talking about that? Again, it's what I see in the charts. That's the reason I'm not talking about upside targets. Anything's possible. I'm not going to say this market can't go on to new highs and well beyond in 2020 or 2021, but a lot of what I'm seeing in the charts and everything I've talked about in the past indicate this is still a bear market rally, just one that's had a lot of juice in support, unprecedented, never before seen support by the Fed. That's probably given it a little more life than it might. Well, without a doubt, I don't think the most ardent bull won't argue that the Fed hasn't given this market life, put it life support that it desperately needed, and undoubtedly had a good part of this to do with this. And again, the bounce itself was technically induced. The start of the bounce, not a surprise priced into the charts, but where we've carried to, I think, again, is a lot to do with that. Okay, let's move on. That's just kind of longer term ramblings and thoughts there. This is what it looks like when you zoom in on the SPY 60-minute chart. Again, you can see that kind of sideways range right here, and that was what did it today, 307.13. I think I posted that earlier this morning. We were testing right there. And if you look at it this way, let me turn off the lines, something to watch for tomorrow. And so I do these videos, what happened today and then what to look for tomorrow. We have what may be a bearish pennant setting up here, bear flag, more like a bearish pennant, an impulsive leg down followed by an area of consolidation. And should this happen tomorrow, or tonight with the futures, we could gap down, that's a possibility. Then either way, an impulsive break down below, whether it's a gap or open and run down there, that would be a sell signal right there on the SPY. And you take to get the measured target, you just take the distance of that flagpole, add it to the top of the flag, and that gives your measured target. So that would put us somewhere down there. I'm just eyeballing it. I didn't measure it out. It probably would come in, it usually does, with a support level. Let's see. Yeah, I'd say that would take us down to that 295.63 gap right there. That one was already backfilled in the pre-market session once. But it looks like the market's going on to backfill gaps that it's already backfilled, if that makes sense. Sounds like Peter Piper picked a peck of pickled pepper kind of thing there. There it is. Market backfilled these gaps once right there. Backfilled that one right there on the gap down, and it hit that one in pre-market right there. And again, that's kind of what am I near term. Another run down there to 295.63. But we'll see. There's work to be done. What is that work to be done? Well, right here I have this line. I've had it on the 60-minute chart for a while. By the way, the market just closed. That was the closing bell. 50, about a value of about negative 0.57 is the line that's probably done the best job of delineating bullish and bearish trends right here in SPY. I often use the zero line. I talk about that, and what I'm referring to is that PPO signal line, because it's the last of the two to cross, and that level, either the zero line or in this case most recently a little bit below there, has acted as support and kept during an uptrend and kept the uptrend intact. We did have a whipsaw right there, and we're back above it. So if we can take that out, then that could indicate a trend change here in the S&P 500. And again, before I leave the S&P, most importantly, the sell signals, they're still intact. I'm not crazy about this kind of sideways move. It really doesn't fit well with what usually happens after a powerful sell signal like that. Usually you get a snapback rally, and then you resume and you take your next leg down. So again, this isn't a normal market, so take it for what it's worth. And like I said, so nothing big on SPY today. We did have a sell signal on QQQ, as I mentioned, and there's a little more work to be done. I'm going to get to that work here in just a second. Shows well on the 60-minute chart with that 60-minute uptrend line. This is the board I want to show you. We've had these series of uptrend lines and divergent highs, little small uptrend lines, breakdown, correction, uptrend line break, correction, uptrend line break, correction, uptrend line break, correction, uptrend line break. So far a little pullback. You know, one of the bigger down days in a while, but still nothing. You know, when you look at the bigger picture, it's just kind of a blip on a clear uptrend, at least off those lows back in March. All right, so what to look for tomorrow? Well, there's that similar flagging type action. Let's clean up, take away the lines real quick, zoom in a little bit. And here's how we close the day on QQQ. Remember QQQ, it's not the market, it's not as representative of the economy as the S&P 500, but it is more representative of the FANG stocks, the market leading stocks that people still can't get enough of. And we've seen that fairly dangerous disconnect with outperformance in just a handful of those big names, or at least not only those big names, but they've been doing most of the lifting. In fact, I just read a headline that it's been the biggest, most pronounced lift in just a handful of names. In other words, that deterioration of market breadth that I've talked about, fewer and fewer big stocks doing the heavy lifting in a decade. Well, guess what? A decade ago was the last bear market, so that's probably the period they were referring to. And I noted that back at the time in the highs 2007 leading into the market top. We saw that as well. A lot of fewer and fewer stocks, namely the market leading FANG stocks, and those doing most of the heavy lifting. So either way, let's just take it for what it's worth. That is an impulsive leg down. That does take the shape right now, as of now, of a bearish pennant formation. It's a very close cousin, same net effect to a bear flag. A bear flag, you have a flag looking pattern like this, then your breakdown, that's your flagpole, bear flag. And bearish pennant, same net effect, except it takes the form of a pennant, which is like a symmetrical triangle type pattern, and then you get a breakdown. If you get a breakdown, again, it's like anything, like a head and shoulders or a cup and handle pattern or rising wedge or falling wedge. It is a potential pattern, in this case a potentially bearish pattern, awaiting a sell signal with a breakdown. And ideally you want to see an impulsive breakdown. Then when you get it, you know what the way these patterns work, typically the move out of the pattern, not only do you have a measured target of the flagpole, that same distance, but usually it's an equally impulsive move leading out. In other words, you don't zigzag down like this to get to your target. It's usually like that or similar. Okay, and then for that to happen, of course, you have not just the pattern to take out, you have support. And you can see right here, there's a shelf of support. And I can draw right there at about 243 or so. And that also makes sense. So if the flag breaks down, you've taken out, look at all these candles, that's quite a bit of support. It's similar to what would happen in SPY there, except we had this recent lift in QQQ. Remember, I showed you that was divergence, where the Qs, tech heavy Qs went up, everything else, S&P 500, small caps, all that, they weren't doing that. So it was showing you it was not broad participation in that, in the last leg up in QQQ. It was a handful of stocks. So that's it. So really not much more. If we're looking overnight, if the futures tank, or in the morning, or we open up flat or even up and then shoot down, just look for a break at today's lows. Let's keep it pretty simple. That should do the trick to open the door for more selling. And as I often say, support is support until unless broken. So if they can rally here overnight in the futures, what would undo today's sell signals? Well, we're quite a bit below the trend line. A back test at this point, you really don't want to ride that out if you're short, because that could mean a 3-4% or higher. Back trend lines come in, they're dynamic, they come in at higher and higher price levels every day. So the longer it takes to get there, the higher percentage gain it's going to be. So really ideally that 246.93 level, that's the level that was taken out right after the trend line. There's a breakout to new highs recently in QQQ, which has failed. So that gave us a bear trap. And so bullish case, or the bulls want to see that taken out right here with conviction, not just a little pop above and then a failure, but a solid 60-minute close above there. The more green candles the better, and bears want to see, as I said, that recent, let me put a line there for you because I didn't have a line before. I told you it was about 243. We'll call it, there's the lows of these candles. Let's just use this number, 242.55. Let me set a price alert and just see if that triggers tomorrow. Okay, let's look at what didn't happen today. So we had those sell signals there on the Qs. We had that breakdown on SPY, and what we need to see, what we need to happen to get some real traction. Somebody mentioned something on the homepage under the comment section about a swing short, maybe lasting 2 or 3 weeks. Maybe, but here's what I think you need to see. The market, I always say, until and unless tech breaks, the market doesn't break. Technology isn't just important. It's simple mathematics. It's the largest sector. Makes up almost half of the NASDAQ 100, and it makes up a quarter of the S&P 500, which is by far the largest sector. So you're not going to see a big correction in the stock market without tech, the largest sector, going down as well, just because of the weighting. And in there, you can see the impact that these market-leading FANGs have. Did these numbers as of June 15th. Microsoft and Apple alone, just 2 stocks, make up 42%. Nearly half of this ETF is solely attributed to how Microsoft and Apple do. So again, as I said earlier, until tech breaks, until these FANG stocks break, the market doesn't break. And so the number I'm watching, the magic number here, I'll set an alert, is about 101.79. I mentioned that on the comment section today under a couple of the homepage posts. You can see right there, why is that? Why am I picking that level? It's just a nice, well-defined level over the past week or so here. Look at all these candlesticks that have tested level 1, 2, 3, 4, 5. We had one up there, and then today we parked right above it. We tested it from below back here. We tested it from above. So numerous reactions there recently, and a breakout to all-time highs in XLK. So I think on the Qs, you break that, especially with conviction, big red candle. And there's also the potential for an island cluster top, which we didn't have in XLK or QQQ. Remember, we had that in SPY. There's your island right there. It's a cluster of several candles. So these are things that need to happen in order to open the door or increase the odds of a multi-week swing short playing out. Otherwise, they can just do what they've been doing for a while, take what looks to be a nice bearish setup and foil it by running up here, or maybe a little fake out move and then a reversal back above the top of that island. Well, then that would be nothing but bullish if that happens. So that's what we need to see. Bears need to see that. Bulls need to see or want to see that. And what tech is the largest sector. Again, about a 25% weighting in the S&P 500. It's not the only sector, so we'll look at some others real quick and levels to watch, because this is giving us an idea of really the entire stock market. As I always say, the stock market is simply a sum of its parts. You can look, you can't really analyze the charts of thousands of stocks, at least a human can't, but what I can do is analyze the 12 sectors that make up the S&P 500, widely considered probably the most diversified index out there, most representative of the stock market, that is. And so these are the 11 sectors. XLV, the healthcare, is number 2 behind the tech sector. It only makes up 15% instead of 25, but still going to move. This one will move the needle, so we'll watch this as well. And what am I watching? Well, I've gone over these recently, so it's kind of more of a recap. I'm watching 96.71, give or take. That is a cluster, sideways trading range. Healthcare is stalled out. It's still below its bull market highs right there. Came very close. For all intents and purposes, you can call that a double or triple top. That's where so far it's been failing. And you have divergence building right here. Negative divergences have been building on the healthcare stocks, but they're above support. And there's, you can't make it out. Here, I'll turn these up a little bit. I keep talking about the big 200-day simple and exponential moving averages. So there's your SMA, and here's your EMA. They're just different calculations. The EMA will move a little faster. I mean, they're right there. This is a very good level on XLV, an excellent level. Why? It's a confluence of support that all comes in a very close, almost perfectly together right now. 200-day simple, 200-day exponential, and a very well-defined, or at least to me, and a very important price support level. So that's it. So a solid break down below there, big red candle, especially close, would be quite bearish for the second biggest sector in the S&P 500. And if I was bullish and thought the market was going to go to new highs, especially the healthcare stocks, I would step in here. And I can tell you, whether I'm bullish or not, it is objective. This is objective. I mean, you buy a pullback to support, especially very well-defined support. It's objective to go long there with a stop somewhat below. So if you're looking for long ideas, a sector to go into, here's even an older trend line that I have. You can extend that out. That comes into play as well, just below. That's that. And by objective, doesn't guarantee it's going to work out. Doesn't mean it's the highest probability trade. It just means there's support. You can go long with a stop somewhat below. PPO is still above the zero line here, telling you the trend is still bullish right now. At least this on the daily chart. When it's above, the trend is bullish, right? All this, and when it crosses below and stays below, the trend is bearish. Does a pretty darn good job of doing that. Now, you had such a recovery here. It's not a timing indicator. You can see because we didn't cross to right there. So if you're using this to trade solely, no. But it's kind of, you can read it, see where it's going. Look at it when it's about to cross, and then when you get the signal, especially in conjunction with other sell signals, that's when you want to use it. So where I'm going with that is, if we break down here soon, that support level I was talking about 96 and change, we have a solid breakdown, we are going to cross below, and we will put that trend indicator on the first sell signal since right about here before the bottom fell out of the market. Okay, that's number 2. I'm not going to spend that much time on all of them. Number 3, XLF. It's been maybe a month or two, a couple months since I updated these percentages. It changes over time. We're at support. And again, the story here is a lot of key sectors in the market right now are still well off their highs. This rally has been largely due to tech. XLF has pulled back to support. Again, if you're looking for new highs in the market, I can tell you the market's probably not going to go to new highs, the S&P 500, if the financials don't start to participate soon, because they're well off the highs. That is a red flag for the market. And so here's a sector that I would be overweighting if that was my expectation. And again, it's objective to go long here. Even if you're a swing trader and you just want to go long off support for a bounce trade with a stop somewhat below, you can maybe ride up, trail up stops, things like that. However, if we break that, that's not going to be a good thing. So that's one to watch as well. XLC Communications. This one is, as we go down the line, I'm doing these in order of market cap. So each sector has a lower and lower, smaller and smaller weighting. This one, 10.6%, but that'll still move the needle somewhat. So you can watch XLC, or you can just watch two of the FANG stocks, Facebook and Alphabet. Those are the two different share classes. Those two companies alone make up 44% of this. So you're seeing the common theme here. These FANG stocks don't just have a heavy weighting in the major indexes. These key sectors that make up the S&P 500 again are dominated by these stocks. So unless they break down, and I already went through the FANGs in a video earlier today, so I'm not going to do that again. That'd be repetitive. I just wanted to update these sectors. I have that yellow line I've had here for a while, 53. If and when that goes, that will be a sell signal there for XLC, the communication sector. XLY, this is about 10% of the S&P 500, but of that, 1/4 of it is made up of just one single stock, and that's Amazon. So here's what it looks like. That's what it needs to break. That's a pretty good support level. So again, glass half full people looking for new highs. Any pullback to 123 with a stop somewhat below. There's another support if it hits there, and if things get really ugly, right there. Anything much below that, actually, I'll tell you right now, that is a level. I want to leave that line there. I think it's a significant support level. But this would be your probably nail in the coffin line right about here. When I look at this, I see a reaction low there. I see these reaction lows. Anything much below 110, if that happens, I don't expect it to happen anytime soon. Not today, tomorrow, maybe even not next week. We'll see how things go. But if and when that happens, I think that opens a door to a move down to test and probably undercut those lows back from March. But we're a ways away from there. First things first. I don't want to get ahead of myself here. Let's just see how tomorrow happens. Do we get build on today's sell signals tomorrow and over the next couple sessions, or is it just going to be another one-day wonder? We'll see. All right, XLI, again, that's what it looks like. I'm not going to spend any time talking about these. Why? Because they're, we're going down and the weighting there, they're not going to move the needle so much. But you can see, in some of these, I have a trading range boxed in right here. Let me move that for you. See this box? That's what we need to break. Until then, we could continue to chop around. That's kind of been what the market's been doing for a while here. A little chop fest, sideways trading range. Bearish below that line, bullish if it breaks out above that trading range. Still not anywhere near the all-time highs yet, but that could be the catalyst for a run up to challenge and maybe even break out those previous highs on XLP. Energy, energy's been in a bear market for years. There's not really much more to say about that. You can roll back to 2014 is when the energy sector topped and started a vicious bear market. And this is nothing more than a bear market rally. Doesn't matter who you are, you cannot spin this. You can say the 20% definition, but when you look at the long-term chart, energy is clearly in a bear market. And I don't, like I've told you before, I think the old definition of a 20% rise or fall to define a bear market is antiquated, especially in this day and age of central bank massive intervention and liquidity injections that's created the longest and strongest bull market in history because of the easy money and liquidity injections into the system, but not just the Fed, all central banks. So therefore, you get these are just corrections. 30, 40, 50% rallies. And again, it's your perspective. If you're looking at within a bear market or a bull market, a cyclical bear market, and that's all this is. I just wanted to point out by most metrics, just about all metrics, we're still in a bear market here for XLE. And my thoughts on it, well, I'll get to that now. I'm not going to go over the rest of the sectors. Well, I showed you Crude. Crude has played out just perfectly since that sell signal yesterday. I'm sorry. We broke down yesterday, right there. Had several opportunities back testing to get in short or get out of your longs if you weren't at long. Hit my first target this morning, bounced about right to where I had those arrows going, where I figured we'd fall shy. I thought the reason I had that arrow stop and reverse shy of that is this was too easy. It would have been just too easy to catch a long here, reverse close your shorts, ride it up there, all the way there, and then have another perfect entry. Market doesn't make it that easy. It was for a while there were some opportunities, but most of those were last night, 2, 3 in the morning, 1 in the morning, after yesterday's breakdowns yesterday afternoon. And so I thought today would be too easy, and that's what happened. So don't always get all the micro calls right like that, but that one worked out well for me today. I was able to have several trades on this, and again here, boom, hit that 37.62. I always talk about momentum fueled overshoots when you have a lot of downward velocity, a near straight plunge. slightly overshot that barely and reversed, and from there, if you just an active trader just gaming a quick little bounce, that's all that's all I did today. Just a little bounce and then back short again because I think it'll go down. That was a 3.5, no, almost 4% bounce there in crude off that initial tag of 37.62. So bottom line is, it's we're still above it, and the next sell signal comes below it. Do we bounce overnight and go down? I'm leaning towards no. This was a pretty powerful sell signal, but all I can tell you is the next break below today's lows should be the trick, do the trick, or open the door to a move down to my next target, about 35 right there. And I'm going to give you one other target because that's a pretty aggressive target, and I don't think we go straight there. I think somewhere, yeah, right about here. These two levels are likely reaction points where we should get a bounce right there. You can see the two I just added. If you can't see them, it's 36.87 and then 36.30, and those are minor support levels. So I'm looking maybe something like this. Boom. Little reaction there, and something like that. Maybe some flagging action there. It looks like we're flagging right here right now as well, so we go down there. So a lot of possibilities. Again, those are micro calls, but the micro calls worked out good today, and most importantly, this looks like the early stages of a correction, just like this was back here, and this move down off the highs, and nothing goes straight down. You get some zigs and zags along the way. But before all is said and done, that's how much crude fell. And that correction didn't end until you put in a divergent low right there. And that was the catalyst for this rally and the divergent high. So there we are. I think there'll be more downside. And because of that, because crude, this certainly looks bearish, that would mesh with what I've been saying. Crude wasn't going to go down, or was unlikely to go down, I should say, until the market started going down. And that's why you had such a nice drop in crude today, from today's highs, which was that bounce back there. Crude dropped about 8% off the highs earlier today. So that's a pretty nice trade right there. And I posted a USO chart with some targets on the homepage under the video earlier today, or the update, the post that I had with static chart screenshots for CL. Let's see if there's anything else I want to mention there. I do see a little bit of a level right here. I'm just going to add it to my chart. I'm sort of talking to myself here, guys, as I'm looking and seeing some reaction points, kind of where we're consolidating and going back here. Minor resistance, so maybe that caps this snapback rally. If not, should we manage to get all the way back up to 39.50, that would be an objective short entry. Again, doesn't guarantee it'll work out, and we probably have the makings right now. I'm going to add this here as well of a downtrend line. We have several reactions on it so far, so yeah, that would be it. That would be, should we kick back in crude tonight or tomorrow, an objective area to add back short position, or add to one, and with a stop somewhat above it, somewhere right around there. Okay, last but not least, and kind of keeping with my theme of focusing on a few of the asset classes or sectors, commodities, things that that I've seen pretty clear setups in the charts, some trading opportunities. That's it. Crude, natural gas, I'll get to that in a second. It hasn't taken off. It hasn't broken out yet. Still looks to be primed for a reversal. But the ones that I've been trading lately and highlighting a lot are gold and silver. And I wanted to finish with this because this is a great example. You might be thinking, wow, this was one of the biggest down days in a while in the stock market, yet gold fell. Shouldn't gold go up? A flight to safety asset? Well, no, this is a great example of not blindly trading those correlations, but looking at the technicals. Started out this morning highlighting that gold was at very significant resistance, at 1791 resistance, top of the trading range, with negative divergence, this little bearish rising wedge pattern. And although it has played out for a decent reversal, decent drop so far. It's at that trend line, that second trend line I gave you in the earlier video today. And again, so these divergences are there. They're playing out more so. It is a correction in price, and it's holding up. Gold's not falling, and I don't right now, especially with the market starting to show some cracks today. I don't know if I'd care to short gold here And as I told you today, I could see some more downside, but it wouldn't surprise me at all if gold has another leg up. I told you I expected at least another pullback, and before we power on up and break out through there. So despite these divergences, gold could turn and rally up, or it may want to come down a little bit more. Whether or not it does is going to depend, I think, largely on two things: what the U.S. dollar does and what the major indexes do as well, the stock market. And then on a related note, silver, that is not silver. Here's silver right there. Same thing. There was your out today. This, I made a point early today, a couple hours before the market opened, to say, hey, look, here's what I've noticed now since yesterday's update. We put in a divergent high. We had a nice, clean, bearish rising wedge pattern right here. So I know you see a lot of lines in the chart, so I'm using this color coding tool to say, yes, this was bullish, that breakout, back test, another back test, and we may do this. However, within there, so this is a larger bullish pattern. We're on the same time frame, but this is a bigger pattern, and yet so that really projects for a larger move up potentially. However, near term, these are cross currents, we have this smaller bearish pattern. And I've often said this, and I know it confuses people, and that's why it bears repeating, that I can be bullish at any point in time, bullish, bearish on the same security on different time frames. In other words, there's near term. What is that? Well, it depends what near term I'm talking about, what time frame I'm on, but anywhere from hours to days usually, intermediate term, days to weeks typically, longer term would be weeks to months. So right now, this was a near-term bearish thing, especially when we had the sell signal. Now, we could have bounced there. So as I said today, a break of that level would have been, and was, the sell signal, and boom. So that's what happened. We had a kickback rally, and that was another chance to unload silver after the sell signal. If you've been trading any of this wave up, and there it is. So kind of technical cross currents at this point. Again, you might not want to short it because the bigger picture said this breakdown, this is just a back test of that larger trend line with the much larger divergent low right there. Again, smaller pattern. And if the market goes down, you may see gold start to rally as a flight to safety asset, and that could bring silver up. Actually, I should say here to my next target, 18,414. So either way, kind of near-term stuff. It's been a good, last couple days have been good. Actually, last couple weeks have been good for swing trading silver, and today, for an active trader. And that's about it. The dollar, of course, as I said, will be the other thing influencing what happens to gold. And again, that was the reason I did that post this morning. The dollar hit my target right there, that 96,411. In fact, that was the last target I gave from this small wedge. We had this bigger downtrend line right here, and a breakout in the dollar with a divergent low right there. It was a catalyst for this move up. However, we set up, as I showed the other day, in a bearish rising wedge, rallied right into my target here, which was resistance, and the divergences played out. Went on to get a sell signal, had danced around that support for a little bit, that support zone, broke down, hit my next and final near-term target. That's a pretty darn good support level. Why? Well, when I look at it, I see quite a few reactions. I see boom, 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 a lot of reactions here, and I also see a smaller bearish pattern coming on the heels of a larger bullish pattern that says this may be in the dollar corrective wave, and we could go up. And I showed you earlier today, I did have some scenarios that we may go down here as well. I'm not sold on that. In fact, if you recall a few weeks back, it was my final maximum upside target. And when we hit this one, I expected the drop that we got. This is still a possibility. I just want to say that. My convictions aren't super high, so I'm just going to kind of watch this, see how it trades overnight, see what it does before aggressively engaging gold and silver again. This trend line right here, by the way, that resistance level goes back quite a bit here, and it was a pretty powerful breakdown when we got it on the dollar index right there. You can see dollar had been dancing on that support level for a while. Boom, breakdown. That was pretty bearish, and we haven't yet back tested it. So yeah, like I said, bullish there at the divergent low, bearish at the divergent high. pretty good support. Let me keep it simple. If 96,411 goes now, if we reverse, that's going to be bearish, and we'll probably go on and take out that previous low there. Likewise, if we can power up much above this recent high right there, 97,585, that may be the catalyst for a back test of that 98,746 level there. So we'll watch this, and I'll continue to update it. One last thing, because I consider this another asset class in its own. I usually lump it on the categories on the home page. You'll see there's market analysis, which covers the stock market. There's gold, commodities, currencies. I usually throw this in the currency category. I consider it a dollar alternative, although I know it's technically not a currency. But and that's Bitcoin, and there's I follow Bitcoin Futures BRR, and I also use this one GBTC, which is the Grayscale Bitcoin Trust. It's like an ETF that tracks the price of Bitcoin, similar to an ETF. I have this support right around the $10 level. Pretty big level. I mean, my chart's busy here. I know there's a lot of lines, but there are a lot of reactions along, going all the way back here off that level, and I think it's a significant level. Remember, we had a divergent high with this rising wedge pattern recently. We also had a downtrend line right here. So here's what's happened lately. To kind of recap: downtrend line right there, failure at the downtrend line, breakdown below the bearish rising wedge pattern, and we're dancing on support. We haven't broken it. And if we do, I'm going to go into some Bitcoin prog. You could short this one, of course. One thing give me pause. You have the PPO is still above the zero line. We could get another thrust up. My degree of confidence, whether we're going to break down now or not, isn't very high. But if we do, let me show you some trade ideas. I've already covered these, so I'm just doing updates really. And those are my Bitcoin proxies, I call them. Riot blockchain tends to trade in line with Bitcoin. So if Bitcoin breaks down, Riot will probably break this trend line there, maybe a short. I pointed it out here recently with that divergent high. It's already pulled back. You know, it's a volatile stock, so don't put too much into this, but it's dropped about 40% right there, 38% since that divergent high at resistance, at the $3 resistance. So I might have mentioned it back then too, a couple weeks ago, as a swing trade back down to the trend line. I think I did, because that trend line hasn't been visited recently. Now, just kind of eyeballing the charts and looking at these indicators, I could almost put equal odds and that we'll get one more thrust up, and we'll get a divergent high, but we're going to extend these divergences like this, get one more thrust up, maybe put in a marginal new high, extend the divergences before we go on to break down this trend line. And that would be the same with Bitcoin. Bitcoin would probably do the same, hold support here, get one more thrust up. So now it might not. So I'm pointing this out. If you guys want to take that, you get the sell signals on Bitcoin, a breakdown on Riot. There's some potential targets there. The other one, there's a couple I've highlighted recently, but no, this one, Overstock. Overstock rallied into resistance recently right here, about $30. Pretty good level, was big support back here. Support once broken becomes resistance. Negative divergence, clean divergence right there. You know, and simple stuff. Look for these divergent highs, and they produce short trades. Look for the divergent lows, and they produce, typically long trades follow those. So this is a divergent high. We could continue to diverge, maybe push up a little higher, or we could reverse here. Same story. First target would be the uptrend line. Second target would be, I might have to work on this one a little bit more, study this chart a little further. There's certainly some support above that, but let's just keep it for now, this trend line here, and then the 1878 level, and then 1453. All right, I'm going to wrap it up here. That's enough trade ideas, and I will pick it up tomorrow. If there's any big movement in the futures, I'll get something out early. If the markets kind of look like they're going to open on or around where we closed today, then I might wait till right after the open to see what happens after the opening bell. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.